All right, what's going on, weirdos? Good morning. How the heck are you? X is acting up, I know, this morning. So if we're streaming there, I set up the stream to be live on X as well. Whether it's working or not, I have no idea because X is acting up. So if you're watching on X, let me know by putting a comment so that I know that it's working. If not, well, oh well, what are you going to do, right? Let's get into it here, guys. We got quite a bit to talk about. See what's going on out there today. We got our first super chat of the day by Ben, my guy. He says, happy Friday. I'm giving you $5 for a cookie update. Not trying to FUD, but down 45% and see no upside for that project. Well, let's have a look. What I can tell you is, I don't know if you guys have noticed a pattern or not, but it seems to go through a rotation of paranoia when it comes to projects. It'll be Moonwell, and then it'll be Nadix, and then it'll be Honey, and then it'll be something else, and people like to pick one single project out and go, this one scares me. Maybe true with Cookie, but usually that's the case, right? Let me have a look at the chart first of all. All right, let's go to the daily. Yeah, it's had a pretty significant dump over the last 3 days, eh? Significant little dumpy dump. I have, hang on a second here. Yeah, what we have is a failed breakout. So if I pull up the chart here, you see I had this line put in here, right? This trend line. We need a break above. It's been in a constant downward structure, but when it breaks out of this, it's going to be pretty juicy. And as you can see, we had the breakout above the trend line, and then the failed retest. So we tried to retest the trend line, failed to hold it as support, failed to bounce off of it. So now we're back down below, and we're holding support down at the lows. But let's go have a look at if X works. Let's go have a look at their X page. Let's look at their socials. How busy are they? So the chart, all the chart shows me is a failed breakout attempt. That's all that shows me. How am I not following Cookie Dow? I am now, I suppose. This is not Cookie Dow. This is the wrong page. Because they have plenty of posts. Okay, yeah, X is acting up. I just click follow, and now it's asking me to follow again. So I can't figure out what's going on with their X. Look, it says 13,900 posts, but it says it has no posts. So X is not working right now, so I can't really verify anything on X. But as far as the charts, and then I look down, I'm seeing a lot of people as I look down at the orders. I'm seeing a lot of buys, a lot of sells. People are panic selling it, but some people are scooping up the dip, right? So some people are buying the fear. Look at all those buy orders. Yeah. Oh, you guys can't even see. Sorry. There. Boom. Look at that. So, yeah. Some people are panic selling. Some people are buying the fear, no matter how you slice it. For me, what I'm seeing is a failed breakout attempt. We broke out. We failed to retest the trend line, broke down, back down below, holding the lows right now. So we'll see what happens, right? We'll see what happens. I don't know what's happening in terms of news because X is not working. So maybe you guys, if you guys have heard anything, let me know in the chat, and because that could be a reason, right? So let's get into the chat a little bit, see what's going on out there. Hybrid Dad, what's going on, man? Let's go. God bless everyone. Our time is coming soon. Amen to that. Amen to that. Bought a little ZBEC and Nadix to celebrate being able to buy on Coinbase DEX. There you go. There you go. I dig it. It's a win. Alfredo, what's up, man? Good morning, Rob and fam. What's up, Kizza, my dude? River's been pumping again, up 100%, nearly. Yes, I actually saw your posts earlier today over on the Patreon. Was it today, this morning? Yeah, you asked me about this last night. And boy, oh boy, did you find one there, man. Holy smokes, right? Went on a big tear. It was down yesterday. Now it's up significantly. It was down like, I don't know, like 6% or 8% yesterday or something. But yeah, it's made itself a nice little recovery here. Let's go have a look at the chart on River. Oh, never mind. It's only giving me, that's right, it's giving me the wrong chart. I can't do that. So anyway, yes, I did see, man, River is pumping. Let's see if we can find it on the bubbles, actually. Let's find it on the bubbles, my guy. Okay. River, there we go. Boom. River's looking good, man. Look at that. Look at let's go to the year or the month, the year. It hasn't even been around a year. Look at that. 703% move on the year. I'll take it, man. I'll take it, brother. H. Barberina in the house. What's going on, man? Good to see you, brother. Guys, make sure you hit the like and subscribe on the way in. We got 65 people watching right now. We have 35 likes. Not a bad ratio, but let's get it to 50. Let's get it to 50, guys. I know it's slow. People aren't really paying attention right now. So I would like to say also, though, congratulations to everybody who actually is paying attention right now, because the people who are paying attention when things are boring and red and slow and all that stuff, those are the people who end up making money later. All the other people, they just come racing in when everything's pumping. But you're here learning and figuring everything out now. So congratulations on that. World Liberty partners with ZBEC. This project will be $1 in the next 5 years. You know what? I am picking up what you are putting down, A-Train, 100%, man. Ditto. What's up, man? Happy Friday. Happy Friday. Do you anticipate we get to a point in the near future of Bitcoin scarcity? Yes. I think that we will see $1 million Bitcoin one day in the near future. I believe that, now I'm not saying next year or anything, but, next 5 to 10 years. In saying that, I do see a time when people are going to have to put in pre-orders for Satoshis of Bitcoin. I do see that becoming a reality at the amount. And I know a lot of people might roll their eyes at that right now because you've never seen it happen. So So you can't imagine it happening, but everything's impossible until it happens, right? So basically, what I see happening, we're seeing more Bitcoin being purchased on a daily basis, being scooped up by these institutions and treasuries and ETF issuers and stuff like that. We're seeing more scooped up and taken out of circulation than is being mined in a day. Okay, so you do the math on that. At some point, maybe it takes 2 years, maybe it takes 3 years, but at some point, you're going to get to a point where if you want to buy Bitcoin, you're going to have to put in a pre-order for it and wait in line for somebody to sell some so you can buy it, because there won't be any available, right? That is why I'm not selling my Bitcoin ever, right? Because, and people say, well, why would you buy something and never sell it? Well, because you can take out Bitcoin backed loans, for example. I was reading an article this morning that Arizona, the state of Arizona, is now allowing you to take out Bitcoin backed mortgages without actually having to liquidate your Bitcoin. So that would be why I won't be getting rid of any of my Bitcoin anytime soon. Blessings, John. Good to see you, my friend. Smash the likes. Yes, absolutely. Miller Mountain. I'm in Washington State. My X was down this morning, but it's working. Yeah, it's been giving me trouble all morning. So, Cookie dropped snaps because of X conflict. What fundamentals are we excited about? Yeah, I'd have to dive deeper into that, but I can't right now because X is kind of down, right? Paul, good to see you, man. I sent you a DM about Cookie. Can you reply, please? I will. I have 8 DMs I got to get to this morning, so I'll get to it. Marcus, what's up, man? Any love for Canton Network? Yeah, we actually love Canton Network. We did a deep dive video or a deep dive on it about 3 or 4 days ago over on one of our Patreon lives, deep dives with Max and Rue. We did a deep dive into Canton Network. So definitely missed out if you're not part of the Patreon community there. That's where we talk about all the good alpha guys, all the gems, all the great projects. That's where we talk about them, right? You got to get over there to be a part of it. Never mind, X is still working on my end. Nice. There she is, guys, the one and only Gamma Goddess. She says, let's get this money. Absolutely. Crypto is the future. Hey, Rob, can we get TA on XCN and ZBEC? Everybody gets one. Everybody gets one. I'll pick the first one that you said, and we'll go with XCN. Everybody gets one. If I give everybody as many as they want, people would send me 5, 6, 7, 8 requests for altcoin TA, right? If you want them like that, send it in a super chat, and we will have a look at it. But let's have a look over at XCN. We have a bull flag forming, a bull pennant forming here on XCN. Very, very nicely. Very nice. Yes, you like it. Nice bull pennant forming. Getting close to the end of it. Could see a breakout as soon as, I'm hoping it doesn't happen on the weekend because we don't need no CME gaps. But let's say maybe it plays out by Monday, Sunday night, Monday, right? You're looking at a move up of about, from the break, you're looking at a move up to about 2 cents one, maybe 2 cents, something like that. Nice little breakout on the bull pennant. So, yeah. XCN's looking strong. XCN's looking strong. How much ZBEC is a good bag goal for both long-term and short-term holders? Well, in my personal opinion, I think everyone should be holding at least minimum 1 million ZBEC. Put it away on your cold storage wallet, your Decent wallet, and forget about it for 4 or 5 years, because I really do believe that ZBEC is very similar to XRP in terms of its potential in price action. So yeah, even if it does a third of what XRP did, XRP got all the way up to what, $3.30 this cycle. Even if you had a 50 cents to $1 ZBEC, you're loaded, man, right? So not financial advice, but in my opinion, I think it's a good idea to hold on to at least 1 million ZBEC long term, put it in self-custody, put it away, put it in your safe, put it wherever, and, forget about it for a few years. IC Oracle, what would you buy for 2K right now? Today? Let me zoom into the weekly. I'd probably jump into something like XPL, to be honest with you. Plasma's looking juicy. Something like that. Dave, what's up, man? Good morning, brother. Good morning. X is shut down. Yeah, I don't know why. It's giving me trouble today too. I don't know what's going on. What's the difference between? Is that like an Eminem song? What's the difference between you and me? X gonna give it to you. The Clarity Act should be renamed the Banking Act. I blame Elizabeth Warren. Hey, absolutely. We're going to talk a little bit more about it. But yeah, we're caught up in the chat, guys. Let's get into the news. See what's going on across the crypto space. Might as well go with the title for the video, for the live. What do we have? Who gets the yield? Really, guys, this is what the Clarity Act and the whole battle behind it is boiling down to. Who gets the money, right? Banks want to get your yield. They want to put the yield in their pockets, and they don't want you to have it. Exchanges think that you should get yield on your stablecoins, right? So this battle really comes down to who gets to keep the money, right? Do the banks get to keep your money, or do you get to keep your money? That's what it boils down to. And the banks are paying Congress to fight on their behalf so that they get your money, right? Let's have a look. Who gets the yield? Clarity Act becomes a fight over on-chain dollars. Since missing its January 15th markup date and being pushed to the end of the month, the digital asset market, or the Clarity Act, is becoming a proxy fight over who gets immediate US dollar yield on-chain. Open decentralized finance, or DeFi protocols and payment rails, or a narrow club of large custodians and banks. With the latest draft tightening how rewards on stablecoins can be offered, critics, including stablecoin issuers and institutional DeFi platforms, warn the bill risks exporting on-chain credit offshore rather than making it safer in the United States. So basically, guys, think about this for a second, right? If in the US they decide to protect the banks and the banks get to steal all of your yield, then what are people going to do? They're going to do the same thing they've been doing in crypto for the last decade. They're just going to go offshore and they're going to gain their yield in other countries, right? They're not stupid. So this hurts as a proxy. This hurts the United States and prevents the United States from being a leader in the digital asset space. When you are stealing the yield from your investors, from retail investors, they're just going to go get yield somewhere else, China, Japan, wherever the case might be, with a VPN, right? So it doesn't take a rocket scientist to figure out that the same thing that's been happening is going to continue to happen as people continue to go offshore, as long as the United States government continues to rake them over the coals, right? You can't be the leader in the digital asset space while raking your citizens over the coals and stealing all of their money, right? It's just that simple. You can't have it both ways. Coinbase's decision to pull support for the bill this week laid bare industry fears that the compromise has tipped too far towards the incumbents. The text locking in the punitive model for DeFi and rewards. Coinbase CEO Brian Armstrong argued that it was better to have no bill than a bad bill. And Chief Legal Officer, Variant Fund, Jake Chervinsky said, the clarity was the kind of law that would live for 100 years, and we can take all the time we need to get it right. So Jake says the market structure bill is the kind of law that lived for 100 years. Billions and billions of dollars will be spent figuring out what it means before it even is fully implemented through rule makers. We can take all the time we need to get it right. Yes, exactly. Clearpool on-chain credit marketplace CEO and co-founder Jacob Kronbinskler spoke to Cointelegraph about the Clarity Act's core risks, regulators deciding where yield is allowed to exist instead of how risk is managed on chain markets. Quote, demand for dollar yield won't disappear because of legislation, he said, arguing that if compliant on-chain liquidity structures are constrained, activity is likely to move offshore or concentrate in small number of incumbent intermediaries. So exactly what I said. They're just going to take their money elsewhere, right? And the U.S. will suffer as a result. Ron Tarter, CEO of stablecoin issuer MNEE and former lawyer, echoed those concerns, telling Cointelegraph if stablecoin rewards are pushed offshore rather than made transparent and compliant onshore, the U.S. risks losing both innovation and visibility into these markets. That choice will shape where institutional on-chain credit develops over the next decade. Tarter reads Clarity as drawing a deliberate line between passive deposit-like interest and activity-based incentives, adding that the key fulcrum is the phase solely in connection with holding. From his perspective, the bill is trying to mediate between banking groups worried that stablecoin yields will drain deposits and platforms viewing rewards as a core revenue stream and incentive. Here's the thing, guys. I'm sorry, but we're talking business here. There are no feelings and emotions in business, right? And big banks have had no problem keeping their emotions out of it while stealing your money for years, decades, right? Centuries. And now all of a sudden, because something bigger and better came along, they got a problem, right? Unbelievable. For now, he sees one bright spot. The Clarity's current approach makes sensible distinction by not treating developers and non-custodial software as financial intermediaries, something he calls critical for innovation and institutional comfort. Of course it is, but again, the yield is where the investors really care the most, right? So let's get back into the chat. Jasmine USD and Jasmine USDT, as they have different price points. Shouldn't it be only one? My thoughts is liquidity could be split. Yeah. I mentioned yesterday Cookies Snap and banned on X. That's why Cookies dumping way more than the rest of the market. Interesting. But what are the deeper implications is what I want to know. So that's why I want to do a deeper dive into it. I hear Moonwell all the way. Nice. It's a me, Mario. Say what you want about Coinbase, but I respect them for. Yes, me too. 100% ditto. Me too. Exit flip. Does Trump have to sign off on the Clarity Act? Yes, he does. I believe so. Or he could just veto it like Biden seemed to like to do. Anything positive towards crypto. Sent you a screenshot from X attached to this video in the Patreon chat about Cookie. I'll have a look at it after the stream. Ray, patiently waiting. No emotions here. There you go. All right, let's keep rolling along here, guys, as the tug of war continues for yield on stablecoins. We got a Kaspa piece here, guys. So why Kaspa's 2026 roadmap could trigger a massive Kaspa repricing. Let's talk about it. We haven't talked about Kaspa in a long time. Kaspa's price spent much of the past year moving sideways, testing patience rather than excitement. The calm stretch often hides the most important developments. And that is exactly where Kaspa now finds itself. A recent deep dive from Captain Altcoin YouTube channel breaks down why the 2026 roadmap could mark a turning point for Kaspa's price after months of quiet consolidation. The focus is not hype or short-term momentum. Our analyst frames the roadmap as a structural reset that aims to change how Kaspa competes inside proof-of-work networks. The foundation of the 2026 roadmap centers on a major consensus upgrade called DAG Knight. The protocol replaces the current Ghost DAG system and is scheduled for early 2026. According to our analyst, this shift matters because DAG Knight removes artificial delays that often limit throughput on other blockchains. Kaspa gains stronger security. At the same time, DAG Knight is designed to reach closer to 50%. That's the tolerance, which improves. Here's the thing, guys. Okay, let's be real. Let's just be real for a second here, okay? Nobody gives a crap about layer one efficiency. Nobody cares, okay? What matters, whether something in terms of a layer one is a good investment or not, is are people building on that network? That's what matters, right? Are people building on Kaspa? Are they building? Because right now they're building on Solana, they're building on XRP, they're building on Ethereum. Are they building on Kaspa? That's what it really boils down to. You're going to see, if you're new to crypto, guys, listen, you're going to see a lot of YouTubers out there who are going to shill layer ones, their favorite layer one, which is fine. I love layer ones, okay? It's one of my favorite narratives. They're fantastic. They're necessary, obviously. But you have to learn to ask yourself certain questions. Nobody gives a flying monkey's arse whether it's fast and secure and all that stuff, because me, as a retail investor, I'm not building on the network. I'm not building a project on Kaspa or any network. I'm just buying in, hoping other people are building on it to increase the value of the network, right? Look at Cadena. Nobody's building on it. The blockchain died, essentially. It's not dead because it's decentralized, so it's still there. People can still build on it, but no one's building on it, right? So it doesn't matter. You can watch all the YouTubers in the world talk about the trifecta and scalability and security and and block time and all that stuff, and it all sounds really, really good. But at the end of the day, if nobody is building on the network, if nobody is increasing the value of the network, no one gives a flying monkey's arse, okay? And I'm not saying this to FUD Kaspa. I like Kaspa. I hold Kaspa, okay? But these are fluff pieces at the end of the day, talking about throughput and security and, the network's going to be so good because of this. And scalability and security, it's all fine and dandy, but it's not going to increase the price of the project, okay? People building on it is what's going to increase the price of the project, right? That's it. The functionality of it, the use, people using it. If no one's using, do you know anybody building on Kaspa right now? Name one crypto project off the top of your head without Googling it or anything. Name one project building on Kaspa. You can't, because nobody is, right? There's some meme coins that built on it like a year and a half ago, right? But outside of that, guys, that's what matters. So if you're new to crypto, again, I'm not saying this to FUD Kaspa. I think Kaspa is a good project and stuff, but no one's building on it right now, right? That's just the long and short of it. So when you're watching these layer one videos about these projects, you have to ask yourself these deeper questions. Don't just pay attention to the fluff that's being put out there. Are there any real world use cases for the project? Is anyone using it? That's what matters, right? Not scalability and security. That is only relevant to developers. And if developers are not developing on the network, then they don't care either, right? So, yeah, I'm just kind of trying to help you guys learn how to do proper research into these projects. I like Kaspa. I hope it does well. I hold it. But this isn't enough. It's not even close to enough. I want to see announcements about, DeFi protocols building on Kaspa. I want to see, all kinds of, I want to see, all these other companies and the migrating over or launching inside the Kaspa network. That's what I want to see news on, right? Not scalability and security. That's the only thing any Kaspa content creators talked about since the formation of Kaspa, right? That's it. Scalability and security. It's so fast. It's so fast. Okay, who's building on it? That's what matters, right? Again, I like Kaspa. I hope it does well. I believe in the project, but they have to start incentivizing people to build on their network. That's what matters, right? So anyway, rant over. Got to learn how to do proper research, guys. Of course, we have this as well. Bitmine staked another 145,000 Ethereum, now totaling 1.68 million Ethereum staked. They're going for $1 million in yield per day. That's pretty insane. Tom Lee's got a nice little strategy going here. I dig it. I dig it. Let's get into a little piece about the SEC here. SEC crypto investigations, shocking allegations of political influence in dropped cases. Ray, what's going on, man? Yes, Brandon says, hey, Rob, I bought a decent wallet using your link. I got it because of you and Max, and I'm so glad I did. It's crazy how simple. Yes, they're very, very easy to use. Absolutely. Absolutely. And you can stake on there too. So definitely look into that. You can stake your crypto on there. All right, let's get into this piece. What's going on with the SEC now? November 2025, a group of U.S. Democrat House members have leveled serious allegations against the SEC, claiming the agency halted major cryptocurrency investigations. How much you want to bet Maxine Waters is at the behind this, right? Against the industry's donations for former President Donald Trump. The development raises critical questions about how political influence on financial regulation. Okay, but there was a lot of political influence when the SEC was suing every cryptocurrency under the sun. This is a joke. It's a circus. Oh, look, Maxine Waters. What do you know? Representative Maxine Waters. The woman, by the way, who was blowing kisses at Sam Bankman-Fried. Maxine Waters, Sean Casten, and Brad Sherman, the Shermanator, recently sent a detailed letter to the SEC chair, Paul Atkins. Consequently, they documented at least 12 cryptocurrency-related cases that the agency dismissed or closed since early 2024. These cases included significant actions against major exchanges like Coinbase, Binance, and Kraken. The lawmakers presented compelling evidence suggesting the SEC had strong legal grounds for these cases. Moreover, they highlighted the timing correlation between case closures and cryptocurrency industry political contributions. The situation created apparent conflicts between regulatory enforcements and political fundraising activities. The cryptocurrency industry dramatically increased political contributions during the 2024 election cycle. Yeah, here's the thing, guys. That's not because of Trump. That's not because they thought Trump was so good. That's because the crypto industry spent the last 4 years being assaulted and molested by the Democrats, right? Illegal lawsuits being thrown around and everything else, right? You had an SEC chair who was consistently and constantly breaking the law to have his own way. He was lying in front of Congress consistently, not showing up, refusing to provide documents, accidentally deleting emails, and much, much more, right? So this is a three-ring circus. Let's go over to Squawk Box and see what's going on over there. Key takeaways from the bank Q4 bank earnings. Let's see how the banks did.
Morgan Stanley reported at the top of the hour. For more on the sector, let's bring in McCrae Sykes, Gabelli Funds portfolio manager. Good to see you. You want to go one by one? I guess it's called bottoms up or tops down. The market's reaction the last couple of sessions to the banks that we did see, Mac, it wasn't great. Was it justified with what was in the? If you go into it was the devil in the details negative for banks so far.
No, I don't think so. I think there was, you had very strong performance in 4Q, all of 25. So some pretty premium valuations on these names. So a little bit selling news. And then, we've had some policy kind of uncertainty, whether it was the card fees, the card act, et cetera. So a little more attention to that. And then I think we also had some rotation as well, some tech, big cap financials into the lower financials. So I think there was just some technical overhangs, but the earnings results, if you by and large, were pretty strong and look good for 26 as well.
I guess you really need to be a banker or actuary to understand credit card fees, Mac. And if you can't if 10% doesn't work, there's a lot of people, there's a lot of deadbeats. Is that what the problem is with, why do you need to get up to 20, 22, 23%? You're covering, good creditors are covering a lot of losses from people that just charge stuff and then don't ever pay. Is that what happens? What do banks need to make money in that business?
Well, I wish I could explain it really simply, but it's a little more complicated than that. As you say, there's some insurance element to the whole system, but it's obviously a very competitive industry. We heard that from JP Morgan. So they manage their margins, and the expectations of the consumers are unique and competitive. That kind of relates itself in terms of some of those dynamics. I think applaud the White House in terms of trying to lower costs for consumers and finding products that can do that. The cost of credit historically has been kind of well studied. There's an element to it, again, of the insurance part. So I think everybody wants to try to help out certain consumers with that credit where the high cost is there, perhaps some programs, some different offerings, et cetera. So I'd bring more attention to it is perhaps a good thing in terms of analyzing it and getting to those consumers who may need it.
Well, you said it's really competitive. That should work. That's how we count on everything to avoid price caps or any government rules on what a company is able to do to try to decide what the right price for its services is. It's best to avoid that. But in this case, do you think Senator Warren or President Trump has a good understanding of what you just described, and that is all the different things that can cause it to be a really crummy business where you make will they make no money and lose money at 10%, or will the profits just not be as flush as they have been in the past? Which is it?
Well, again, Joe, I don't know that it's completely that black and white. I think it's somewhat complicated. I think everybody's intentions are good in the sense of examining it and finding out where we can help the consumers. And we have great leadership in companies like JP Morgan and Bank of America that can help out as well. So I think it's under scope. We want to help the people.
Right. Is it a bad idea, the 10% cap? We can just say it if it is. Most of the stuff Elizabeth Warren says she's rife with bad ideas about anything that has to do with the economy or corporate America.
Well, it just says, so you just have to make sure where you apply it and so on. Obviously the credit dynamics, if you have 5% default rates and your cost of credit is 5%, that kind of presents a challenge, obviously, in having a cap with 10%. So
right, okay.
Again, you can parse out the different programs, the different cohorts, et cetera. But it's good to constantly examine this whole space and protect the consumer and find opportunity while also protecting the system for profitability and ensuring, the overall safety of the system.
Some of the numbers that we got, you can go through your favorites and which ones you don't like, but a couple of those reports, there were some negatives in a couple of reports on it's either Monday or Tuesday. Net interest income, investment banking. Where were the fly in the ointments? What was it?
Well, listen, we can sit there and look at 200 million quote unquote miss from JP Morgan and investment banking. And, we kind of found out on the call that there was a little bit of timing in that. So, it's important to sort of mark your models and all that stuff. But I think when you go to the high level and you're looking at 26, and especially the results we just got from Goldman, Morgan, and BlackRock as well, we have accelerating momentum from the fourth quarter, very high level of execution and good opportunity in terms of GDP being, as you said earlier today, 5%, lower cost of capital versus a year ago, and a very engaged kind of high level market as well.
and maybe a consumer, maybe it's K-shaped, but not falling off the cliff at this point. So your favorites in the group, do you just buy them all, or what do you like?
So I like Morgan Stanley here. I think that if you look at they blew out their net new assets in their wealth group, 120 billion. So just a very extraordinary in terms of that growth rate. 31.5% margins there, which is going to be a focus. Continued great execution after Jim Gorman put in this architecture in terms of the digital aspects, the asset management, et cetera. And then you just have a long runway in terms of next year, in terms of capital markets, issuance, M&A. We're still waiting for the sponsors to kick in. So it should be a pretty fruitful year in terms of all the things that Morgan Stanley would benefit from. So continued good momentum there. We'll get more of an update in terms of their strategic profile at 825, but we like that.
All right. Anybody else?
And I just, Goldman Sachs has done extraordinarily well. Unfortunately, we haven't owned enough of it. But we look at valuation here and some cyclicality and potential peak earnings. If we think that some of this will be compressed in the first half of this year, as people discount the midterm elections next year, or this year rather. So we could have heightened activity, IPOs, et cetera. So, it really depends on how much you weigh the sustainability of kind of some of those fee-based components to Goldman Sachs. But at, over 3 times tangible, it's a premium valuation.
See, guys, banks are going under, man. They need your yield to survive, right? They're going under, man. Come on. U.S. lawmakers press SEC over paused Justin Sun enforcement case. Let's talk about it. So again, Maxine Waters and the Shermanator and stuff. Now, this one I agree with, okay? This one I agree with. Justin Sun is in my personal opinion, one of the last bad actors in the space that needs to go, right? And I think they need to weed him out because, I've never seen anyone act as greasy as I've seen him. I've seen this guy. Remember when he bullied his way into getting 2 billion free XCN coins by threatening to flood the project on the internet if they didn't give him, and then all of a sudden, once they gave him coins, he stopped funding the project and started talking about how great the project was. Yeah, that's extortion. Like this guy's a bad actor in the space. I'm sorry. His behavior speaks for itself, in my opinion. All right, what else do we have? 2025 was brutal for Bitcoin, but Arthur Hayes sees liquidity-driven rebound ahead. Let's talk about it. Despite notching an all-time high above $126,000 in 2025, ended on a sour note for Bitcoin. In fact, the crypto asset lagged gold and the NASDAQ in the same period. BitMEX co-founder Arthur Hayes cited declining U.S. dollar credit as primary driver for the underperformance. In his latest essay, Frowny Cloud, Hayes attributed Bitcoin's weak showing last year's primarily to contraction in the U.S. dollar liquidity. He explained the dollar credit, described as the most important force in 2025, directly influenced the price dynamics of Bitcoin, gold, and the U.S. equities. He noted that while gold and the NASDAQ 100 rose during the year, Bitcoin underperformed relative to these assets due to the decline in fiat liquidity. The prominent market observer added that sovereign nations increased their purchases of gold in response to geopolitical risks and U.S. policy actions, including restrictions on Russia's treasury holdings. These nations sought to reduce exposure to U.S. treasuries, which ended up accelerating gold buying and strengthening its role as a global reserve asset. Looking forward to 2026, Hayes expects a rebound in the U.S. dollar liquidity, driven by several factors. First, he anticipates an expansion on the Federal Reserve balance sheets through continued money creation and reserve management purchases, RMP. According to his estimates, this will inject at least $40 billion a month into the system. This expected rise in dollar liquidity could provide support for risk assets, including Bitcoin, as the central bank balance sheets grows and lending activity expands. He noted that Bitcoin's value historically correlates with fiat monetary expansion, as its proof-of-work blockchain benefits from the increased supply of US dollars. Hayes suggested that with liquidity poised to expand in 2026, Bitcoin could follow the upward trend established by other assets during the period. So he thinks we could see Bitcoin follow gold and the S&P 500, right? Very, very possible. Very, very possible. And then we had, I had this from, I wanted to play this clippy clip here from Brian Armstrong as well. Just talking about the bill, CNBC. He said banks are trying to kill crypto with the market structure bill. Listen up.
Well, I think the high-level principle here is that we can't really have banks come in and try to kill their competition at the expense of the American consumer, right? People in America should be able to earn more money on their money. I think stablecoins are an opportunity for banks. They should be able to build great product lines with this. It's an opportunity for crypto companies. Congress and the laws that get passed, they should really create a level playing field and say, this is allowed, this is not allowed. Now, all American companies, go compete, try to build the best products and services.
Exactly.
That's great. What's not great is if the banks can put their thumb on the scale to try to kill some of their competition, and they only pay about, 14 basis points on the average savings account. Consumers should be able to earn 3.8% on their stablecoin rewards. And so we're going to keep fighting for our customers' rights and the 52 million Americans who use crypto every day.
I mean, what would you say to the argument that banks have put forward that because of the role they play in the economy, the loans that they make, if they do wind up seeing billions of dollars, as some have estimated would happen going from banks to stablecoin, they say that could have a big impact on the economy. What's your response to that?
Yeah, well, banks don't have a monopoly on lending money. Actually, crypto is doing quite well in this area as well. And crypto is a technology to update all parts of the financial system, whether it's lending, capital formation, et cetera. So I think banks do play an important role in the economy and making these loans. Crypto should be allowed to do similar types of activity. We're not engaged in fractional reserve lending. That's an important point, by the way, because the bank license, what that really allows you to do is fractional reserve. The banks don't have all of your money there. That's why there's so much oversight and you can have these runs on the bank. Stablecoins have 100% reserve, right? And they're all the assets now post-Genius are held in this short-term US treasuries. So in my view, it's actually a safer place to store your money, and crypto companies should be allowed to compete and offer loans just like banks.
So banks are essentially saying, like, look, this could create a bank run, right, where everyone wants their money. And we don't have it. We don't have their money because we fractionalize banking, right? So we borrow and create more money than we actually have, right? So people come and they say, we want all of our money, but we don't have it. Whereas these DeFi protocols, lending protocols, and stablecoins are all backed one-to-one. They are solvent. They do have it, right? So banks are essentially saying, whoa. We created a problem, and now it's starting to backfire on us. So you have to stop it from backfiring on us, right? No. At the expense of the American citizen. No. Sorry. Doesn't work that way, right? Innovation. We're heading to a new phase in the financial system globally, right? And there's going to be bumps and bruises and pain along the way. It's not going to be a smooth transition, right? There's going to be times of pain. There's going to be companies, banks, whatever, that go under as a result. But that's competition. That's the business world. That's innovation. That's the way the world works. It's unfortunate, right, for some, but it's better for others. So anyway, guys, let's get back over to the Bitcoin chart. Now, if you guys recall, I said over the last 2 days that we were likely going to come back down and retest this yellow line at $94,000 even for support. So far, we're pretty close. We've come pretty close to it. We almost touched it, 94.3, which would be close enough technically. We could still touch it. We could wick below it. As long as we continue to close above $94,000, we're golden, right? So again, I've told you guys for a while now, we've been below 94K since November 17th. We finally broke back above it. It's only natural for us to retest it as support, confirm it as support before our next leg up, putting in another higher low along the way. So this is all bullish for the bigger picture, right? So I'm excited about it. Speaking of staking, I was looking at all the options. What do you suggest? I would suggest, for me personally, nothing longer than 30 days at a time. Crypto J505, what's going on? Gengar's in the house. A guy, what's up, man? Happy Friday. Happy Friday. All right, guys, I got some stuff to do. There is no live on the Patreon this afternoon or this evening. It is open mic Friday night, so make sure you're there for that. I will be dropping a video for the trading group today as well, so make sure you catch that, guys. And yeah, get over there, book your coaching calls, whether it's one-on-one or group coaching calls, whatever the case might be, guys. Let's sit down. Let's have a look at your portfolio. Let's get you pointed in the right direction here, right? If you want to learn about crypto, if you want to learn to succeed, how to make profits, how to structure a portfolio properly, if you don't know what you're doing, come aboard, guys. Book a one-on-one coaching call. Let's sit down. Let's have a chat. Let's get you pointed in the right direction. The link is in the chat. It's in the pinned comments. It's in the description. Click like if you like this video. Click subscribe if you really liked it. I'll see you in the next one. God bless.